the S&P 500. This is the daily chart, and the rising wedge pattern is still in play. Below you can see the MACD is giving off major divergence. And this is telling you something different. This is telling you that we should expect a larger top in play. It's not like over here where it seemed like it was overbought and we were due for a sell-off only to resume the trend higher. This is telling you that we should expect a major reversal. And if you look back to the May highs, you can see that prices were making higher highs leading up to those highs, but the MACD was making lower highs. And oftentimes when you have a major divergence, you usually follow up with a divergence after a sell-off. So we did, and as prices went down during August and through October, there was a pretty notable divergence that formed. The MACD down at the 40s, that's extremely oversold conditions. Prices made new lows, but the second time around the MACD could hold up. This divergence has taken over 4 months, which is telling you that we could see a severe sell-off. Now I also want to show you the GDX, and this is the weekly time frame. And leading up to this current top we have, as you can see from here, well, it really dates back to this previous point. There is also divergence. Take in mind this is the weekly chart, so this is a longer term trend that we're looking at, and it almost appears like we're forming a rounding top formation where we kind of have to drift sideways, and then we just drift lower and lower until we roll over. We are now below the center line on the MACD. The histogram bar has pushed into positive territory, but again we're having the patterns of lower highs and lower lows in play, and GDX on the daily time frame, and we have, similar to gold, a bullish divergence, a larger one that is, which could allow for prices to move slightly higher. It does appear like we are forming a smaller upward channel within a larger decline. The pattern still holds true. We do have lower highs in play. We have lower lows. This is pretty clear. With the recent price move, we have already formed a divergence on the MACD as well as the RSI. Prices are approaching the 200-day moving average. It does appear that this was a previous resistance point. We're coming in at gap resistance. This was also a cluster zone. Looking at gold, and this particular trend line actually dates back to the 08, and because I had a lot of editing to do and it seemed like I had some material erased, I'm going to try and make this part of the video shorter, but it does appear that prices are trying to back test here. With this recent move, we do have now divergence forming on the MACD as well as the RSI, and in fact this part of the RSI is actually more overbought than this previous peak, yet this peak was higher. This is the longer term trend, so keep that in mind, and it can even go slightly higher depending on how you draw it. This right here seems to be almost like a trap. There is larger divergence in play as well, which could allow for a little more wiggle room. It may even that is if prices can go higher, and if they do, it could be at this trend line or slightly breach this trend line. Prices can sometimes and often overshoot before they resume in their overall trend. Another thing I wanted to point out is that with gold, we are currently in a downtrend, and that is because we have lower highs in play and lower lows here. And if you look, you can see that the type of sell-offs to the downside are very nasty. They're very sharp, and they're accompanied with large volume, and you can see these kinds of rallies to the upside, which look very corrective in nature, but then they get smacked back down, where you can see that wasn't the case during the uptrend that we experienced with gold. You can see as prices were trying to sell off, they were more or less consolidating or moving sideways. I think gold has had a pretty nice run. You know, it's gone for now 11 years, and I think that we're due for a correction. But it's it's noticeable to see that the type of patterns that you see in prices in a downtrend are very similar to this, where the moves to the downside are powerful because it's in a downtrend, whereas in the uptrend the moves are powerful to the upside. So do keep that in mind. Here's the US dollar on the daily time frame, and what's interesting is that today we had a pretty big sell-off for the dollar, but the metals did not show that much of a correlation. You know, on the GDX we got a spinning top, and for gold as well. Spinning tops are candles of indecision, but sometimes they can also be candles of consolidation. So we'll have to see how that plays out. But usually a fairly large move to the downside in the dollar correlates with a pretty big move to the upside for the metals, and that didn't take place. This channel line, this lower channel line, is drawn from the August towards the beginning of September to here, you can see. So I would expect that if there's any more downside for the dollar, it should hold at this trend line. Another thing I want to point out is that the type of small up moves within this larger uptrend are playing out very similar. We're basically, the way we're selling off is similar to this decline, and I say that because it's following a very similar type of move to the upside. If you look here, you can see that there are 3 peaks, 1, 2, and the third. We sell off pretty hard, and then we follow a very similar type of uptrend. We have the first peak, the second peak, and then the third. So if prices do actually go lower and they can get to the trend line before they resume higher, that could allow for the MACD to put in a bullish divergence, something similar to that. So I'll be watching this, and I hope you enjoyed the video. This is the very first one I've done, and it took me a while to edit. So okay, this is for February the 23rd.